Hello, traders. Welcome once again to the liquidity narrative. So today, like we said, we want to talk about daily buyers and how to determine directional edge. Your daily buyers is like a higher probability directional view. Is not about predicting the completeness of the market or the closing of the market or the price, but trying to use the information, the price story to get a bias of what you want to do. Am I likely to buy? Am I likely to sell? So in this video, we try to give as much detail as possible for this to make it easier for everybody to understand. So like we said, daily bias is like getting an idea of what you want to do before you start trading. You're not trying to go either ways, maybe price run up and you want to go up, or price run down, you want to drop down with the price before the market regime or before the section regime. You already know in mind what you are looking for. I'm looking out to take a buy today, or I'm looking out to take a buy during the London section or the New York section. I'm looking out to take a buy this week or a sell, whichever one. It has given you a bias of what you're looking for and how to utilize that. So that being said, what next? We're going to take a step by step of the things we want to cover in this particular will I say lecture, will I say class, but whatever you call it in this particular video, we will take a step by step of what we want to cover. So now the next thing we are going to be looking at is exactly what we are looking for when we want to get our bias on what we want to do. As you can see, we've already mapped out a step-by-step check to follow. When we want to start from the high time frame, most times it can be your weekly charts. You're looking at the overall trend of the weekly chart. What's the weekly chart making? Is it giving you a higher highs? Is it making highs? Is it making lows? Is it like a lower highs or lower lows? But most times, the weekly chart might be a kind of a big view. If you don't understand it, you might get confused. So if that is not going to be of help to you, you can start your top-down analysis, maybe using your daily chart. Until you have gotten that, you can be using the weekly chart. So on your daily chart, you're also looking at the trend. What the market has been doing, just like we said on your weekly chart. Like this, if you take a look at this particular first chart, you can see that was a weekly chart. Obviously, you can apparently say it was making kind of highs. That means it's in an uptrend. But in the weekly chart, okay, I don't want to go into a lot of things that will get you confused. So let's just focus on what we are looking at. What the second chart down is more of a daily chart. To some people, is giving more of a bearish view. To some others, is giving more of a bullish view, depending on how you are looking at that. And that is why we said we want to simplify how you can utilize this for your daily buyers and know exactly what you're doing in a particular period you're trading and to see what you're looking out for. So on your daily chart, you're looking at the current structure also. Is it higher highs? Is it like highs? Is it lows? What has the 3-5 days direction been? Where have price been to? Then on your forehead, which can also serve as a higher or high time frame chart, most ICT traders, most smart money traders, they use mostly 4H to determine their directional bias. So when we have apparently understand this, you look out which direction the market is going in. You're trying to do your top-down analysis to be able to understand the trend of the market and where the market is at a particular time, with other things being included in it. So these videos or these charts are a real charts. This is USD JPY charts. If you go through the weekly time frame, you'll see exactly what we've put here is what market has been. The areas we draw out are the likelihood where we were watching the price to get to. So after doing your check on your starting from the higher time frame to figure out what is doing, what's the market structure on the higher time frame, where exactly is market or price has been in that higher time frame. If you're able to get the structure of the market, one of the things you market structure can be highs, but then at that particular period you are looking out for your bias. It could have been maybe a pullback of that structure. So meaning that we might be getting a bearish bias, or what they say, a bearish outflow, in as much as we're in a bullish structure of the market. So those are the things you have to understand. So after determining that and which leg, are we in a pullback in that leg? Are we kind of in expansion in that leg? You know exactly what to do. Then the next thing you're going to do after that will be, we've talked about the market structure. So we said in this particular area, if we have a bullish daily bias, that is price is making higher highs and higher lows. And like what I explained before, I said which leg are we in? Are we in impulsive move? Are we in expansion? That's what we mean by the last significant move. Was it a break of structure? That means it has moved back to where maybe it has broken structure, or is it still in a pullback? So if it has broken structure to the upside, that means you are looking at like, okay, we're in a bullish bias. You've confirmed that though. But if price is making a lower low, making a lower highs and lower lows, and then also structure has broken to the downside of the market, meaning that you are also in a bearish scenario. What we want to join the market is when price has retraced back, or if it's in a bullish range as the market pull back, like retrace down, we want to find ourselves at the retracement leg of the market to take a buy high. But if it's in a bullish scenario, we want to see the market, as the market retrace back up, we want to join the market on the upside of the market as the market retraces up to take a short. So those are the other things you need to understand. So first we said we have to identify the market structure we are in. After identifying the market structure using your higher time frame, the daily time frame, the 4H, or your weekly time frame, that has given you, okay, this is the structure we are. Then, like we said, you have to identify the leg. Is it in a pullback? Has structure just been broken? That means you have to wait for a pullback to join the trade. We have identified that. So what's the next thing we are going to be looking at for? So next, you have to start looking at, locate where key liquidity pools are. This area is what the smart money are using in order to exit their trade and enter a new trade or take a trade. So what do I mean? As in this chart you can see, which will also show a practical aspect of this after this video. You can see when we identify in the previous one that the market was a bullish scenario. So the next question is, where can we locate the liquidity pools? So like we said, for a bullish bias, we expect price to sweep sell side liquidity that's below equal lows, the previous day lows, the Asian time lows, and the swing lows, then move towards buy side liquidity, which would be maybe the old highs, the equal highs, previous days highs, the weekly highs, also maybe the fair value gap, the other blocks. Those are also an area of liquidity. But if it's a bearish bias, we expect price to sweep buy side liquidity, and those we can find above equal highs, maybe old highs and other blocks, fair value gap, before moving down to the sell side, which is our target. So these are the things you need to figure out. The question you ask yourself, where are the key liquidity pools in those markets? Even when you get confused about the bias, you don't know the leg where the market is, like market is making highs and probably don't know where the next or the liquidity. That's the more reason some people might say, okay, it's a bullish trend, but somehow the market dropped huge and they got confused thinking that it has turned or changed to bearish scenario. So they join in the market in order to take a sell, only for the market to reverse and then start going up. market was only going down to take out liquidity. Market was only going down to seek out these key liquidity pools, which is like a magnet. It attracts people in order to trap people into the market and before moving to its direction. So after taking those liquidity, that's what's called where your question you ask is where are the liquidity? Where does liquidity sit? If I'm looking to buy, liquidity must sit somewhere on the downside of the market. So I begin to seek out those areas where liquidity reside to help me take an entry. So you locate your key liquidity pools, whether in a bullish scenario or in a bearish scenario. After that is being done, what's the next thing for you to do? So finally, we are looking out for the directional draw on liquidity that determine the directional draw, which is our draw on liquidity. First, you can find out that we have liquidity pools where stop losses are being placed, and those are the area that smart money uses to take in the trade, exit their already existing trade and take new trades, and then start looking for the opposite, which is the main target from the onset, but whereby most of us, the retail traders, may not really know what's going on. So we jump in when apparently smart money was just only going in to take liquidity before continuing. So if the structure is bullish, we expect price to reach sell side liquidity, just like we said below, then moves higher to the buy side liquidity. And those buy side liquidity can be previous day high, can be equal highs, it can even be a fair value gap or order block on a higher time frame. If we are bearish, so we expect price to read above highs, then moves lower towards the sell side liquidity. The same thing applies on the sell side. So we're going to be jumping in to see the real life of what we have placed here on this. But then before then, you need to know this. Here are the framework I want you to remember every day before you trade. One of the things is to do is first, what is the higher time frame trend? This is like a checklist for you. Is it bearish? Is it bullish? Using what we have discussed here. So the next question is, where is liquidity resting? Just like we said, you are locating where the liquidity. If I've determined that I'm bullish or bearish, the next thing is, where is liquidity resting? Is it above? Is it below the price? You already know where it is. So I know where I'm waiting for the price to get into before I could start seeking to take a trade. So the next question is, has liquidity been taken already? As I'm doing my study, maybe liquidity has been taken already. So price is trying to expand to the direction to it draw on liquidity. If liquidity has been taken already, I'm looking okay for the market to expand, for me to expand and then retrace, for me to join the market and go. If the market has already gone or expanded, there's no need to chase the price. It will always give you another entry sometime, someday, or during another section. Do not chase the market. Do not chase price. Or is price likely seeking it? If price is seeking it, so hold on, wait, and allow the price to do its thing before you'll be able to start looking for a way to get into the market. So the next question is, what are the section revealing? Is it sweep? Is it reversing? Is it continuation? Most times price might apparently seek liquidity after the market open on the London section, like it gives take out liquidity, and then maybe the New York section would be the main direction. The price might open and then take out the Asian time liquidity, because most times the Asian time is always consolidating, and the price will come up, sweep that liquidity and give, most times, I didn't say all the times, and then we wait for an entry. Or sometimes the London session can be the main trend of the day. But this is how you build your directional bias. First, check out what the trend is saying on the higher time frame. Secondly, figure out where your liquidity sits. Thirdly, has liquidity been taken? Ask yourself question, what is the price doing at this point in time? If it has not been taken, wait for liquidity. If it has been taken, look for an opportunity of entry. If price has already expanded, do not chase price. Then thirdly, what's the section? If you are a section trader, which section are you trading, study it and know exactly what it's doing. That will give you an idea of what to do. That is how you build your liquidity. That is how you build your daily buyers. Remember, price doesn't move randomly. Price is always looking out for something. And that's something that price is looking out for, is what liquidity narrative is all about. Trying to show you exactly what price is looking out for. We are not predicting. We are not giving you, it's not like a certainty, it's a high probability. So I'll say once again, follow structure over speculation. Let's jump in and take a real life example of this chart that we've shown you in this place. All right, join me. All right, so this is the live example of what we're talking about, the practical aspect of what we're talking about. So let's take a look at this. Like we said, one of the questions is for you to determine the market structure. So in this particular scenario, what will you say that the market is doing? Now, forget about what is happening here. Focus on this aspect, the current market structure. What is the market doing? We've um, we've talked about in those particular um, in this particular channel, we've talked about the dealing range, which is also part of it. Everything is being put together, but in this particular one, we are looking at your daily buyers. So let's focus on this area. What is the market? What will you say on this weekly time frame that the market is doing? That is it. If you as you can see, currently the market is actually making highs, right? So for us on the weekly time frame, we said that the market is a bullish scenario. Just like we said, which particular leg is the market in, which particular side is market in, as even though that the market is making highs in this particular leg, this was a pullback, a retracement. Markets were retracing into something. So if you have joined this particular trade here, would have been you joined this trade here for a buy, it would have been your stop, you would have been stopped out in this particular area because the market apparently was a bullish trend, but the order flow here was bearish order flow. So it's trying for you to, you are finding yourself out. Where am I in the market? So we've determined here apparently. So the market has been a bullish scenario. So in the current scenario, that is where we mapped out this particular line. We are focusing on this particular area. Dropping on the daily time frame, we still ask the same question like we said. What is the market doing? Oh, sorry, that was, let me fix it back. That's a fair value gap. Okay, I can actually put it back later. So we drop on the daily time frame and then we ask ourselves, what is market doing? Focusing on the same area from here. You can see in that particular pullback or the retracement what the market did, but we are focusing here in this area. What was market doing? The weekly has said we are bullish. How do I know that the bullish on that weekly has ended? That's class for another time. But then let's focus on this area also in the daily time frame. You are not clear in the daily time frame of what the market is doing at this particular point in time. Then you can move down to the 4H. Just like we said, most traders in ICT or smart money uses the 4H. This is exactly the picture that we had in the presentation, as you can see. So now at this point in time, because I already knew that overall trend of this market was bullish, you can see market making highs until this market dropped hugely here, was actually looking out for something. On this particular day where the blue line was me as I'm looking at for, okay, what exactly are we looking at within that? That should be this day. What exactly are we looking at in this particular thing? What is our bias? As the market dropped back, the new week was resuming within this area. So the question is, where are the key liquidity pools in this? Before this happened, I've already knew that the liquidity sits here, and this is not cherry picking. I already know that, okay, this area, just like we said, our liquidity pools are the area where stop losses clustered. You know, most times you say, okay, this is resist, this is support zone. So if I take this trade, I'm going to put stop loss. Most retail traders here, right? If you take this trade, you probably puts your stop loss here and the market started to move up. You are happy that market is moving up. But these areas are where the sell side liquidities are. So those are the area where the smart money is apparently looking to exit this short and then take another trade to the upside. So this is what we are looking at for. If you drop on a much lower time frame, like the 15-minute time frame, you can see much clearer of what that particular levels are. So this is it. You can see how clear it is, how this area, these are the places where liquidity sits. So we know that liquidity sits on this area. Even if I want to take this trade high, the truth of the matter is that you won't be more confident on this particular level, knowing that price might likely come back to take out those liquidities before continue to go up. So I'm watching my eyes remain on this level to see exactly what price we do, even if this trade is being taken. Apparently I would have exited this trade on these liquidity areas because this is another buy side liquidity. If you are more of a day trading or scalping this trade, you know that when you take this trade, maybe here, I will exit this trade at this particular level, knowing that liquidity sits on this area. But then focusing on what we are teaching, apparently, so we can see price, these areas are all sell side liquidity. Liquidity sits on this area. Look at what price did after that. So suddenly the market came back. The first one took out this liquidity. So for whoever that joined this market, we apparently want to exit this market as the market continues. That's why you always ask you to take partial. If you're waiting to exit this market here, you may not likely get it before the market reverses, or you might get it before the market reverses. So you can see maybe market took out liquidity here and then you take a buy using a lower time frame like the 5 minutes or 1 minute 1 minute time frame. You probably plan to exit the market here. Would you be able to get it? Suddenly the market dropped down but didn't take you out and finally get back to take you in and to exit the market. Then as we move along, let's see what happened apparently on this level. And suddenly the market dropped, clear all the three liquidities. We can apparently call this equal lows, right? Or we can call them old lows. Market came back and took out the liquidities. Liquidity has been taken. So that is when you start if you are a long-time trader. For those who would have scared out from this particular trade because apparently cleared up everything because this is another side, the buy side liquidity. Market has taken out liquidity and before reversing. So because of what we are looking at for after this liquidity has been taken, what the price did, price reverses. This is where you start looking at for somebody that trade longer time, you start looking at for your trading entry pattern. Immediately liquidity is being taken, like here, liquidity is being taken. You look out for your trading pattern. Here, there was no liquidity taken, as you can see. This particular liquidity was, let me expand it, let me zoom it more. So as you can see, this particular drop took out this liquidity. So it gives you an entry, right? And you exit this here. This particular drop never took out any liquidity, as you can see. So there was no liquidity in this particular area. You don't have a trade here. So again, the price dropped and took out all the three liquidities here. So you start looking at also for an entry. Immediately liquidity has been taken. Just like we said, first, you get your higher time frame market structure. Secondly, you're asking yourself um, where the liquidity sits. The top thing you're looking for is your draw on liquidity. So if we move back to the higher time frame, maybe like the 4 hedge, we start looking out for where am I likely to exit this trade. The first exit will be this high because liquidity sits there. Liquidity is resting above this. So that's your first exit. So the next exit you might start looking out for will be, go over to the higher time frame, which is the daily time frame. You can see all this drop here. The sell side market has efficiency, the buy side inefficiency. So if we move over to the higher time frame, what exactly sits there? That was what we drew out there. That was fair value gap. Is also a draw on liquidity for me. So what will I do? I'll map out that area also as another part of exiting this trade. So you exit first on the 4H that has given us the buy side liquidity. So we exit. If you want to take this trade, maybe hold on after taking out a partial. The next place I'm going to exit this market will be here on this fair value gap. If I hold much, it would have been probably on the main threshold at this fair value gap, and the next exit, maybe I'm still holding little, will be the other block. If price did not reverses or turn around on this fair value gap, the next will be on this before I'll start looking at for another bias, for another trade. You see, everything we've taught, we've been able to show in this particular chart. In order not to make this video longer than it's supposed to be, you go through, pick any pair of your choice, go through it and follow what we have said here and see what you can get from it. Get your higher time frame, look out for the structure, look out for the liquidity where it sits, and look at what price is going to do at that particular place, and look at how price is going to reverse and what price is seeking out for your draw on liquidity. If you understand this and use it wisely, you will no longer be running around in the market looking out for what to do in a particular market, but you'll be able to have a pre-idea and a higher probability of what the market is likely seeking. Does it mean you won't have a stop losses or a loose trade? No, but at least you will have an edge that will give you something much better than what you're doing. This is what we are talking about on understanding your daily bias, using it to your own trading. Remember, once again, this is Liquidity Narrative. Hit the subscribe button, like, share the video, and always stop by. Let's do this together. Have a lovely time till we see you next time. Remember, structure over speculation.